It's not a question per se. Let's briefly talk about Nao Capital.
Okay. So thank you very much. So remember what I said, Centum 2.0 strategy, how we moved from 6 billion to 29 billion. It had some byproducts. And the byproducts, one of the byproducts was people were coming to us and saying, can I give you my money to manage for me so that you do whatever you're doing, you do for me the same thing you're doing for Centum. Institutions were doing the same thing, saying, can we give you our money? But we could not do that within the outfit called Centum, because for you to accept other people's monies, you must be regulated. So we scratched our heads and we came up with the idea, let's form a fund management business. And that's how Nao Capital came to be in 2013. And myself and my entire team, we spinned off, started Nao Capital. And Nao, by the way, means number one in Maasai. It's our aspiration to be number one in everything that we do across the continent. So we spinned off and we started now accepting to manage other people's money. In fact, Centum also became one of our customers. So we manage institutional money as well as individual money. We have three business lines: the asset management, where we take care of our institutions; the wealth management, where we take care of families, family offices, and individuals; and we have a third one, which is called advisory, where we connect investors who are looking for opportunities with entrepreneurs, business owners, project owners who are looking for capital. So we bring them together, and then they're able to strike a deal and forge our way forward together. So those are the three things that we do. We have many products, but we really don't sell products. What we really believe in is selling solutions. So one of the phrases you will hear in Nao Capital is invest with purpose. So we don't talk so much about return, we talk about investing with purpose. Where do you want to go? I want to take my kid to university abroad. How much will that cost? Okay. When is this likely to happen? 5 years from today. Okay, fine. What do we need to do today? What plan do we need to lay down? Then how much cash flows do we need? So we project, we simulate, and then we advise you. If you can do 1, 2, 3, 4 things, by the 5th year, when your child is due to go for university, you'll have all the money. And you have been very successful at doing that. And there is not a goal that we cannot be able to do, to put together for you. Thank you.
I had read about Nao here.
Yes.
And I liked the fact that you were investing in Africa.
Yes.
All right. I assume that was so that it can grow as well.
Yes.
And that you can help on the ground.
Yes.
But now, to me, when I listened to Nao's story and as I was reading about it, I asked myself some questions. And allow me to ask as a layman, perhaps.
Please.
All right. Today, you have a number of billion that you are worth, that you are able to manage.
Yeah.
Although it seems like a lot of money to me in some sense, but at the same time, it's very little money. By this, I mean it's Kenyan. All right? If we convert it into pounds or dollars, we have a different story altogether. So that will make it still small. If you talk about 13 billion, I talk about $200 million. That's the price of a football player. Okay? So my question is, what plans are there for the future? Are you restricting yourself to Africa alone? Number 2, how do you intend to bridge that privilege gap? Because I believe that should be the duty of every African, so that we're able to cover what we have lost in time. So that's generally it.
Yeah, it's a good question, and you have really written a whole essay there. But I'm reminded of Steve Jobs. He was asked, when will Apple become as big as Microsoft and IBM? And he said a very profound answer. He said, I'm waiting for the next window. And the next window came with internet. And they were the first company that did converted a phone into three things. Brought internet, brought ability to call, internet, and music in one thing. And that was really the window that we were waiting for. We do not have the established fund managers like BlackRock, which are bigger than economies globally. They are way ahead of us, way ahead of us. And what we can also say, we are also waiting for our window. That window, if you ask me, it has something to do with technology. And I'll explain a little bit further. Today, in Kenya, let's just talk about Kenya, not even Africa. We have about 300,000 investment accounts in this country. 300,000. But guess what? We have over 34 million bank accounts active in this country. So investment has not even begun the journey. We are exactly where Equity Bank was 20 years ago when they said we want to bank the unbanked population. So that is where we are, and we recognize that. And technology is going to be very, very key. How many of you here have heard of the product called Chums? Chums is an app. Bernard, I challenge you. By the time I'm done here, you should be a customer if you got Chums. Chums allows you to invest as little as 5 shillings. And Chums has been there for less than 2 years. The largest retail fund manager in this country has just crossed about 100,000 retail customers. Chums, in less than 2 years, we are over 140,000 customers. And I mean, guards, the people, the house helps, everybody there going into what? Into Chums organically. So, Bernard, we are trying our best. But as many people here who do business, business has its own what? Intricacies. But we are waiting for our window. And when that window opens up, I am sure it will be, I don't know whether it will become as big as BlackRock. My aim is not to compete with BlackRock. My aim is to compete with the opportunities that are around us. Yeah. Sorry, the one for investing with purpose, I'm not sure what the question was.
I was just basically asking, I see very many people in similar circumstances like Kenya.
Yes.
That is generally the global south.
Yes.
South America, Caribbean, Asia, the parts that were very similar.
Yes.
Even South America.
So we can also do the same for them.
Yes, that's what I was asking.
Yeah.
Because to me,
Absolutely.
if you restrict it to Africa alone, there's a risk of time.
I agree.
Yeah.
I agree. But the thing is we have to perfect the model.
Okay.
You have to perfect the model, and then you take the model out there. Yeah.
Okay.
Sorry, I can take 2 more questions. Naima, you've been very quiet, so it's good to hear from you.
Thanks. You talked about all the greatest things that you guys have done in terms of investment, but could you kindly share the biggest risks that you've taken that did not pan out?
Yes.
Because a lot of us do have in terms of things working out in terms of investment.
Yes.
And from someone who has experience, maybe you can advise us on what works, what doesn't work, and what is the future, especially in terms of the uncertain digital currencies and investments.
Yeah.
Especially with the whole
Yeah.
trend.
Yeah. That's a very good question. I like it. And when I'm recruiting, especially investment team members, I always ask them, have you ever lost money? If you've never lost money, you're not worth to be in our team. Because there is no investing without what? Without risk. And I'll give you my own example. I have many, but I'll give you one. There is a time I was very convinced that Safaricom was the best investment in this country. And we set out to buy $1 billion worth of Safaricom shares. And every day would buy about 50 million shares of Safaricom. And we were literally the big movers of the market. A month passed, and just before we could finish the second month, we were at about 600 million allocation, 60% into our target of $1 billion. But I had just parked my car and I was walking down Ngina Street, and it's very early in the morning, and I decided to peep on the newspaper headlines. And I saw this big headline that read, Airtel slashes tariffs by 67%. And I was frozen, literally frozen. I felt sick in my stomach. And I just said, today is a difficult day. I went to my office. The only person I needed to consult was my group CEO. I called him and I said, have you seen the newspaper? Today is going to be a very tough day. He asked me, what do you want to do? I said, we start selling now. The market opens at 9:30 a.m. We were right there. The first block of shares went at 5.55. The second one was 5.40. And then it was just a race. We got to 5 shillings and the market was frozen. Because the par value, everybody had bought shares at what? 5 shillings per share. So if we start selling below 5 shillings, guess what? All of us are going to make what? Losses. And then someone from Europe just sent an order, sell at 490, and just the floor just opened up. From there, it was a race to the bottom. The last shares I sold were at 4 shillings per share. I lost 160 million shillings. 160 million shillings. I was sick, literally. I felt sick. I had never lost that kind of money. But the share did not stop at 4. It went all the way to 2 shillings and 85 cents. There are others who lost much more. I took whatever remained, and I remember I went and bought EABL shares, and that stock also did well, and I was able to recover my 160 million shillings. What was a lesson for me? In my entire investment career, the best lessons have come when I have lost money. And I learned one important lesson, not just for dealing with corporate money, but also my own personal portfolio. Never be afraid to say what? Never be afraid to take losses when assumptions change. Because the assumptions had totally changed. We projected with a very different environment, and right at that point in time, we were in the middle of what? Price war. So when things change, never be afraid to change direction, even if it means taking losses. You will be left with something more than the person who decides to wait and hope. So that was one of my biggest lessons. And the other lesson I learned, there's always another opportunity there to help you compensate where you have lost money. Have I answered your question? Remember I said investment is about a sneak preview of the future. I think I may not be able to comment specifically about Bitcoin or blockchain, but what I can say, it seems this is the direction that the future is going. The form and shape may change, but I think the digital currency is here to stay. So when investors or some of our customers have come and told me, I am thinking I'm doing this. By the way, one of the things as investors, and I mean especially CFA charter holders, one of the things that has puzzled us, is Bitcoin a currency or is it an asset? He's a professor. But what is a currency? Is a medium of? Why is it called a medium of exchange? Because it provides us with what? Store of value, a stable store of value, isn't it? But now this thing is moving up, going down, and now then you have to invest in it, isn't it? So is it an asset or is it a currency? So I am not saying there is anything wrong with it. I'm just saying we need to open our minds. Things are changing. The textbooks that we've been reading are being challenged. You get, So we will need new textbooks for us to understand this future, where it is going. So George, continue, and I hope one day I'll sit here and listen to you about digital currency, because even me, I need to be taught. Thank you. The last question. Gilbert.
So, thank you for the insights. I think most of us, even our parents, the generation before us, most of the time when we get some access to capital, first thing we do is buy land or buy a house. But we've seen that over time, as you get older, when you retire, a house wants to buy you breakfast, land wants to buy you medicine. Is there a way we can retire cash rich?
Cash rich, yes, absolutely. Why do people buy land and why do they buy house? Why? Long term? Culture? Why do people? One word, security. One word is security. Now, we need to assess security. For you to value security, you must have something to protect, isn't it? Have you ever driven into CBD very early in the morning, 4, 5 a.m. in the morning, and you see people, street children and adults sleeping on the streets inside a sack? Yeah? Have you ever wondered why is it that they don't care about security? Because they have nothing to lose. So security is a second layer, not the first layer. The first thing, and this will be my second class, the first thing that you do in investment is to secure your lifestyle. If your job came to a standstill today, if your business just went up, belly up today, would you be able to live the same place you live, take your kids to the same schools, do all the things that you do, go to the same club, socialize the same way that you socialize? Would you be able to maintain the same lifestyle? That's the question that we must start from that question. If you can't, then you need something we call a lifestyle portfolio. A lifestyle portfolio will make sure you secure your flow, such that if everything else goes against you, you do not fall to the ground, you fall to a floor. You get above the ground. Otherwise, it is so easy to have 2 cars parked outside your house, have a fantastic home, your kids going to the best school, and this big assumption that your income will continue coming into your bank account, it has a sudden stop, and you can no longer be able to sustain that lifestyle. In fact, it is very easy to live in a palace but sleep hungry. Yeah? Have you ever seen that? You can live in the best house, but you don't have cash flows. Cash flow is king. So what we do when you do in this journey for investing with purpose, we set you up to earn passive income. Money that comes into your bank account even when you're sleeping. The key word is when you're, if you have a cash flow of 3 million shillings per month, where can't you live in this city? you have more flexibility than somebody who owns a house, right? I can see I have a few converts here. I am not saying don't go to your wives and tell them now we don't need to own a home, because you might not have a marriage. I'm just saying, before you secure a home, secure your cash flows. In investment world and in CFA, see those who attended CFA, a home, we consider it to be a sentimental asset. A sentimental asset. And it is advised that it should never be the biggest investment in your family. It should be the smallest, because it has no cash flows. It has low cash flows. So before you go and commit all your resources to owning a home, make sure that you secure a lifestyle. Make sure that if everything stops, you should be able to continue enjoying the life as you do today.